Okay, welcome. Let's get right into the stock market technical analysis. In this video, I'm going to go through the general market analysis. We'll look at where the broad markets look to be heading here in the near future. I'm going to point out some individual trade ideas that I've been talking about. Big winner from yesterday. And then we'll look at gold and the dollar, and then we'll wrap up. Guys, if you're new and you want to learn about technical analysis and the concepts that I'm teaching in these daily videos, check out my stock market technical analysis course. I priced it at 99 bucks, and it's a good value for the lessons that I teach in that course. It's about 5 to 6 hours, or maybe 4 to 5 hours worth of video training, and I'm going to teach you the things that I found in the market that's taken me many years to learn. And you'll be able to learn that just with that course. So good value there. Check that out. Link in the description below. And then leave me a thumbs up if you guys find value along as we go along. All right, triple Qs. So this is the tech sector, and I do want to point out the bond yields as well. But triple Qs, we've got, we're yesterday we were closed the day right at that 200-day moving average at 366.71. Today, moving around, pretty volatile so far today. You can see we gapped down this morning, and then it rallied right up to the 200, got rejected. So far, still hanging out below that 200-day moving average. Okay, so no technical change as of yet from yesterday, and we'll need to keep looking at what we got. XLK is another way to look at this. XLK is just back testing resistance. So if you look at the daily chart here, you can see this is your daily support line. This is going back to March of 21 on XLK. We broke trend right here. So this was your sell signal, and this came with negative divergence. So momentum was dropping off completely. We got a break of trend line support. So now it's sell the rip. That's what I keep trying to say is, look, you're going to rally into resistance levels. There's going to be counter trend rallies that make everything feel like it's okay. These rallies, if you're going to go into a bear market, those counter trend rallies keep the bulls in. That's why retail, for the most part, they ride bear markets to the bottom, because if the market just kept falling really impulsively every single day, just crash, everybody panic sells out pretty quickly. There's only so much, so much selling that someone's emotions and psychology can take in a row before they just capitulate. But if you get these counter trend rallies like we're seeing here on XOK, where we break trend and then we rally into support. Okay, now everybody feels okay. Things are, looking better. We had a good day in the market yesterday. No reason to quite get out. Keeps the bulls in the trade, all right? So then when you get the next leg down, that's fuel. The bulls don't exit when they have the opportunity into resistance, and so you start to sell down, and they're still in there, and, they start to sell, and that creates the fuel for the next leg lower. So as of right now, we're just back testing that trend line resistance. You can see we've pretty much been, we tested it here, failed, tested again. We're just chopping around back testing. I think it's very likely we're going to fail here and roll over. All right, we could chop around for a few more days, but I do think we're going to continue the downtrend. All right, and then looking at small caps, IWM. All right, rolling out on the daily chart. This is a big year-long trading range that we were in for pretty much all of 2021. We broke to the downside right here, and again, this had huge negative divergence that had just been building. All of this price action, this was a divergent high. We broke to the downside, and we are rallying back up for a back test of major resistance. All right, right there. That's major resistance. So IWM small caps is, from my opinion, is a short right here. This is a very objective area to short for the next leg lower. Okay, with the stop, you give it a little room, but you might want to set a stop, somewhere in that 213 area or somewhere slightly above. But I wouldn't expect it to really recover too much, and likely going to get rejected right in this area. SPY. Oh, and then going back to IWM, the profit target on this would be down here at this 169, 170 area. All right. That's the next leg down. So if you look at it, it's a bear flag pattern as well. You've got the flag here We made the flagpole, and then you've got something like this, and it projects us down in this area about 175. But we've got a key level of support there at 170. So that again just looks like the target to me. I think we're heading lower. Looking at the SPY here. SPY is, SPY's backtesting this broken trend line on the weekly chart. If I go to the weekly, I've got it marked in red here. So again, this is your 2009 Great Recession lows, and this is the bull market trend since that time, all right, on the weekly chart. So support all through here, okay? We started to break, and really the last few years has been about the market trying to go into a bear market and the Fed stepping in and trying to prop it back up. And that's what's been going on. The Fed doesn't have that ability anymore. Inflation has now gotten out of control. We just got the inflation reading today. We're at 7.5%. The Fed cannot save the market, all right? And so a lot of bulls on the way up, they say don't fight the Fed. And now when the Fed's saying, okay, we can't help anymore, we've got to hike interest rates, the bulls just keep buying and saying this bull market's going on forever. Okay, don't fight the Fed. Use your own, logic. But again, in 2018, we broke the trend. The Fed propped it back up. If you remember back here, Christmas Eve, the Fed reversed course from hiking interest rates and started cutting. Okay, then we get the COVID crash. Fed cuts rates to zero. Well, I think they were already at zero, but Fed pumps 6, 7, whatever trillion into the market. We get this massive rally. Now we've got runaway inflation. And I say runaway inflation because the inflation readings keep going up. All right, the Fed has not hiked interest rates, and the inflation reading keeps going higher. So they've got to step in and do something. And we are again breaking the trend. There's your sell signal right there on the weekly chart. All right, that's a breakdown of that big support line. And the last 3 weeks has been a backtest into that. All right, we're above it slightly right now. The week's not over. I suspect we're going to break tomorrow, probably sell down. But yeah, this to me looks like a pretty objective area to look at a short. Although I'm not interested in shorting SPY, more interested in triple Qs and IWM. Okay, gold. As one of the key areas of an inflation trade, gold is typically an inflation hedge. One thing that I really like about gold right now is the fact that it's been in a correction for almost 2 years. So back in August of 2020, we were long the gold miners and everything. I exited all my mining positions back here. Didn't really start getting back in until about March of 21. And I've been building a position pretty much ever since. Now, it hasn't really worked to the upside, but it hasn't really gone against me either. It's been just a big consolidation. And we have been now coiling right here on this triangle pattern. So you see this pattern right there. There's your downtrend and there's your uptrend. The uptrend is the bigger, broader bull market coming back off 2018 on the daily market. All right, so there we are. And as we coil, you can see we're just making another leg up to the top of this coil. So maybe we have another, it's going to likely this is leading us into the Fed announcement in March, where the Fed is expected to hike rates. Okay, so we probably are going to get volatile in this area as we start to, figure out which way we're going to break out of this triangle. This is a kind of an indecision pattern, but the thing I like about it is we've already been in a big, long correction. Everyone's kind of counted gold out and left it for dead because inflation's has been running really hard, and gold has not been rallying. So I think a lot of people are saying, well, it's dead, it's not a trade. And so whenever you have not a lot of people piled into something, that leaves an opportunity for when it starts to break out, everyone's going to rush in. And that's what basically everybody's doing. I've heard it in a lot of different YouTube channels. Everyone's waiting for the breakout one way or the other, and then they're going to pile in. So that's momentum trading. And, a lot of hedge funds and stuff, that's what they do. They just wait, and then when it breaks out, they pile in. So there's a lot of, dry powder basically that can get thrown into gold and gold stocks if we break out to the upside, which I think we're going to do. Again, I've made the case. We're in a longer term bull market. We have bullish divergence that was building. The last divergent low was really right here back on August 9th. So that divergence was intact, this bullish divergence. Momentum, look, it's just moving higher and higher. So yeah, I think we're going to break to the upside, but don't put it past the price action to get a little squirrely right in here. We might do a fake out, run down, break down like that, then run up, something like that. I wouldn't put it past. You got to give it a little room because everybody sees this coil, so you're going to have some whipsaw moves, I believe. Okay, bonds. So this is TLT, which is your longer term bond ETF. You can see we're continuing to move lower, breaking down today, just heading lower, which means interest rates are rising. Okay, so interest rates rising are negative for tech, should be negative for the real estate market, and at the end of the day, that is what is propping up this market, for the most part. Now here's TNX. This shows the 10-year Treasury yield. We're above 2% now. We haven't been above 2% since we really haven't been where we're at since about right in this area, August of 2019. So pre-COVID and all that, we haven't had our interest rates this high. So now we're about to see what this market's really built on, whether it's cheap and easy money or if it's actually built on real economic strength. If it's built on real economic strength, we should be able to handle the higher interest rates. If it's built on cheap and easy money, then the market should continue lower and we should see things start to soften up and come down. Flipping over to the weekly chart on interest rates, TNX, we've got this long-term downtrend line. This pretty much goes back to the 1980s. So this is, from my perspective, this is the reason why financial advisors and pretty much anybody who's investing today says the market always goes higher over the long term. Buy stocks, it always goes higher. And that's because basically the Fed has been involved in reducing the interest rates. Every time you have economic weakness, they've cut the interest rates basically since this time period. All right, we hit a high back here in 81 and the interest rates have been dropping ever since, creating, that creates tailwinds or a stimulus to the stock market over the last 30, 40 years basically. And you can see here that, every time we've hit this trend line, we've had a pullback in interest rates. The Fed stepped in, and this should, this pretty much aligns with a lot of the recessions. Here's the '08 recession. Okay, so, and then recently the Fed's really gotten involved and artificially taken the interest rates way lower than they historically have been. And so again, this is Fed stimulus. All right. So now you can see as I zoom in, the interest rates to me look like they're heading up to about 3%. Okay, that's going to be your longer term resistance area up there at that 3% area. And the market likely can't take 3% interest rates, or that would be about the max where you're going to start to see economic problems. So just some fundamentals mixed in with some of the technicals here. Okay, I pointed this one out, COE. It's a really speculative Chinese stock. I pointed it out in yesterday's video. We had a breakout and a buy signal yesterday on this one. And again, the reason why I point these out, not expecting everyone to just jump on every single trade idea that I point out. And I don't always recommend you to jump on every trade idea unless you can get key positioning. But what I do want to really point out is the skill set that it takes to find these trade ideas. And that's what I teach in my course. All right, so this one, you had a clear downtrend line on COE. We were building bullish divergence. See the momentum, how it's just moving higher on both momentum indicators. And then we got a break of trendline resistance. That was your buy signal. Today, the thing's up 25%, and at a high from yesterday's close, at the high today, it was up 46%. So 46% gain in one day. Not bad. I took most of my profit on that one. I do expect it could easily go a lot higher, but anytime you get a 46% gain in one day on a pretty speculative stock, I think it makes sense to take some profit. This one, COE, we've got some resistance up here at about 229 and, some more at 369. So those are levels to watch. Again, you'd want to probably, if you're going to stay long that thing, you definitely would want to exit your position early on this. Everyone's going to be looking to exit right there at that level. You want to step in early on these things. And don't get greedy. These things, this can drop just as fast as it can rip to the upside. And we'll wrap up with this one here, Alcoa. Just testing trendline resistance for the third day. You can see we tested it right here. And the last few days we've just been trading basically right at that trendline resistance. So when the market drops, as I expected to start dropping here pretty soon, this should start to reject and head lower. Again, the reason why I like it, we have negative divergence. That remains intact. So you'll see here that we basically are keeping that negative divergence while testing trendline resistance. And it's a good setup for a short trade right here at this level. So looking for lower prices on that one. Guys, leave me a thumbs up. I don't see much else as of right now. Again, I am expecting the markets to start dropping here pretty soon. So keep an eye out for that. And we'll catch you on the next one.